Hey traders, welcome back to Your Nifty Guy. I hope all of you are doing well. So, most traders look at today's market and see confusion. I see information. Every candle, every pause, every failed move is the market communicating something. And in today's video, we are going to decode exactly what today's Nifty price action revealed, what it carefully avoided showing, and why that distinction matters going into tomorrow's session. We'll break down today's structure, understand the intent behind the moves, and then convert that clarity into a clean, high probability trade plan for tomorrow without prediction, without bias, and without overtrading. If your goal is to trade with structure, discipline, and consistency instead of emotions and headlines, make sure you like the video, subscribe to the channel, and stay till the end because clarity is where confidence comes from. Let's get started. So, today the markets opened with a gap up, right? And this is what we had discussed yesterday that in case of a gap up opening and around this zone, if we see some negative price action, we can look for a short entry. And this is exactly what happened, right? Try to understand the intent where the market is coming from, right? Right from the open, markets went down first, right? I am exactly sharing what was going on in my mind. Right at the open, markets went down, right? Open equals to high. Now, these I pay a lot of close attention to candles wherein open equals to high or open equals to low, right? So that is showing from where selling is coming in or from where buying is coming up from. Immediately in the next 5 minutes candle, the high of that candle got taken out, right? But then we did not see any continuation around here for the markets to have triggered stop losses of these people who would have shorted the markets around here, right? So this simply means that they were simply positions adding and not fresh new shorts, right? And that is the reason why we played this particular trap setup around. Had the same candle opened around here, I would have blindly entered longs into as soon as the high of the opening candle or the bearish candle would have been taken out. But this is happening in between a zone which is no trading zone for us until unless market gives us some cues. And out here, after that high being taken out, market gave us a good double top right below our resistance, right? If this is not clear, I will quickly simply show you guys this. Now, I always tell you guys that this is the point 0.5, the bottom line is the point 0.5, this is the 0.618, but then that does not mean that the market has to take a resistance of exactly these levels, right? So we pay high attention to the point 0.5 to 0.618 zone, but then again, since these are drawn on your line, on your charts, so you understand, right? So there will be a line somewhere around it, which is the 0.382 zone as well. And markets can absolutely not necessarily has to retrace all the way back up to the zero point 0.5 to 0.618. Yes, this is a high probability zone, but then markets can take a reversal from around here. So this is where I took the first and only trade for me in the day at the break of this particular low with a very small stop loss of around 15 odd points. This is where I had entered the markets. Immediately, markets gave me a good profit. Small pullback, markets went down again. I shifted the stop loss from this to this at this particular point. This was a no loss trade for me, right? Try to understand why, because you have entered out here. You have already moved your stop loss out here, right? So even if market immediately after forming this particular swing, even if it reverses and it triggers this stop loss, you are still in profit. Markets came down again, and out here around in this candle is where I uh, close the position. Now, the reason being, number one, we went back below previous day's low, but then out here, we could not give a closing below previous day's low. Plus, we got a good doji candle, which was also an inside bar in this particular candle. And I thought maybe the markets can reverse from here after trapping people who would have been uh, shorted the markets around the break of previous day's low. And that was the reason at this particular candle, I got out of this market. I captured a total of 32 points in this trade. If I would not have exited, this was another 30 odd points, sorry, 20 odd points in this particular move which came in, right? It came in immediately after I exited, and These are the moments wherein you need to control your emotions, right? You were in a particular trade, you got out at a point, and immediately after you get out, the market again goes in your favor. So this is the time wherein you should have to control and not overtrade. And simply when something like this happens with me, I repeat this every single time is जो book किया वो अपना बाकी सब सपना. So yeah, that was not meant for me. What was meant for me will come to me. I am a big believer in karma. So yes, this is how I try to control my emotions. These are my actual thoughts that I'm sharing with you guys. So yes, this was the trade apart. After that, we were quite close to this particular support zone as well. So I was not looking to initiate fresh shorts. Plus, the structure was a bit weird out here, right? Uh, Out here, the this particular swing high was broken immediately, reversed. It formed a good double top around here, but then again, this was in a random place, right? No particular point of interest to particularly short the markets around here, apart from previous days low. But then again, we have already breached it and quite spent quite some time below it. So again, markets also came a long way from the day's high. So I did not take any part in any short trades around here. Uh, Now out here, we could have initiated some long trades, but then again, the way price action was behaving extremely, extremely weird. I decided to stay out of the markets for the rest of the day. 32 points is good enough with the uh, quantity that I trade in. And as you can see, extremely sideways price action out here in the second half of the day. So this was it about today's trading. Let me know in the comments how the trading went for you guys. Now, if we are to plan for tomorrow, number one, we have got a follow through on the daily candle, right? So yesterday was a reversal candle like we discussed. The high was lower than previous high, the low was lower than previous low, uh, and the closing was below previous low. And in again today's candle compared to yesterday's candle, the high is lower than previous high, the low is lower than previous low, and we have got a closing below the previous low. So the daily bias has changed to a bit on the bearish side. Now, like I have already told you that this is a zone and this has already been tested, right? This was a weekly time frame fib levels and this has already been tested. The only reason I am still keeping it out here is in case if we are to reverse and go up and on a daily time frame, we will need to form a double bottom that will lead to a good move on the upside, and that is the reason I've still kept this particular zone. Otherwise, no uh, key or high importance zone importance is to be paid to this particular zone. Right now, for tomorrow, we'll be deleting this, and yes, these levels will get adjusted a little bit. Yes. So yesterday we had drawn the fib with yesterday's low. Today we have formed a new low, so we'll simply be adjusting our Fibonacci based on these levels, right? And I'll actually keep the trading a little bit on the conservative side for now, because overall, if we look at the markets, they are moving in a sideways range in a much bigger range, right? Tomorrow again. Today, another thing which came in is the cash data. So, because I am recording the video late, so the data is out. And surprisingly, despite it being a negative day, a good follow-through day to yesterday's selling. And I'll just simply share the data. Let me open the message. Okay, so yeah, FIIs have actually bought 1172 CR worth of stocks today in the cash market. So that is a good surprising thing. Keeping in mind today's price action, both FIIs and DIIs have been net buyers today. Plus, apart from that, the reason why I told you guys about trading, keeping trading to a conservative approach is because there is a major round of global volatility, right? So today is Wednesday, so Mr. Trump will be giving a live address from White House. Thursday night, we'll have the CPI data for US, and Friday early morning is again rate hike likely Bank of Japan. So Bank of Japan is actually considering a rate hike wherein all the banks are now cutting down the rates. Bank of Japan is considering a rate hike, so that is a risk of sentiment, unwinding of the yen carry trade. So this is something which is related to the forex world, and if you are interested, you can Google about it and read more about it. The yen carry trade, right? So yeah, that's a particular reason why I'll keep the trading to the bare minimum or maybe a little bit conservative approach. But then again, for tomorrow, we'll keep the plan of action extremely simple. Number one, below today's low, of course, we can see some continuation. So if we open flattish to a minor gap down and then we go down below today's low with a pullback, we can look at a short entry. Needless to say, if we open with a slight gap down and we get a negative candle, the high of that candle gets taken out, we can look for a trap trading setup as well. And yes, once again, around these levels, if we see some negative price action, we can take a short entry. Just like today, it is not necessary that we will need to touch these levels, right? Even below these levels, if we see we come quite close to these levels, and if we see some negative price action, the trade plan is still valid. Above this will be a long entry, right? So this will be the simple and sweet trade plan for tomorrow. So yeah, remember, guys, consistency in trading doesn't come from being right every single day. It comes from reading the market objectively and executing the same process again and again. Actual trading is actually quite boring. Real trading is quite boring. Uh, so that is what I always believe in is trade the plan, respect the risk, and let the market do the rest. So I'll see you in tomorrow's video. Till then, trade safe, stay disciplined, do not break your rules. Cheers, guys, and thanks for tuning in.